here with Cove Capital, Corey Nolan, and he's going to talk to us about his brand, his business, and how he got into this business, as well as the products that he has available through the platforms. So good afternoon.
Yeah, good afternoon. Yeah, thanks for having me. This is great.
Absolutely. So what we'd like to talk about, three things, three subjects: your people behind your business, the product that you have in the market that you're looking for investors from, and then the process of how you take in their money, make a profit on it, and give it back to them with a nice profit to the investor.
Yeah.
So I'll start with our first question. Share us a bit about your background and the business that you built.
Yeah. So Cove Capital, we are a real estate company. We structure our products a little bit differently in that everything we do is debt free. So that goes to the background of our founders. So the founders of our company have been in the wealth management space for 20 years. They encountered all this demand from their clients for real estate products at a slightly lower risk profile. They didn't want a large primary loan. They didn't want, they had investors that were looking for no leverage real estate option. And there wasn't a whole lot of that available. So our founders, through their wealth management platform, have worked with a lot of other sponsors. Some of them would occasionally have debt-free product, and they'd work with them on that. But there was not a consistent source of debt-free real estate investment options available, and they witnessed this demand, firsthand. So that kind of led to the creation of Cove Capital. We started in 2018 as Cove. Since then, we've raised over $700 million across all equity. Wow. Across our products. We have almost 100 properties in the portfolio now. I think we close on number 100 tomorrow.
Congratulations.
So yeah, it's been a fun ride. We have really started to grow in the last couple of years. Originally when we launched the business, 2018, it was primarily intended for clients of our wealth management side. We've really, in the last 2.5, 3 years, made inroads into the broker-dealer and RIA channel, with a pretty sizable portion of our capital raise coming from that community now. And I joined the company in 2022 to really launch that effort.
Okay.
So my background is I've been in the broker-dealer space. I was really part of the compliance team. I would attend diligence conferences like this and sit and listen to all the presentations and hear all 20 or 30 sponsors speak. And I was doing that for about 8 years at a firm. And then ultimately I decided to join up with Cove to roll out this type of product to the broker-dealer and RIA community for the first time for Cove. So it's been an adventure, 2.5 years. We've added 30 plus groups to our selling group, and we're excited with the momentum and to keep going.
Excellent. That's a testament to a lot of work in 2 years.
It's been helpful that it's not a brand new company. We didn't start in 2022 and try and launch to advisors. We had some track record, we had some history, which helps a lot. But I think it speaks to the product. It's compelling product that doing debt-free products, especially in a time when interest rates have been crazy. Right. I think it just helps with the story, and it resonates with the advisor community because it makes sense to their clients.
Excellent. We'll talk about the product a little bit then. So a very unique product in this space in general. No debt real estate. Do people understand that, or is that how do you get over that hump of everything's leveraged? How does
right
and comp and fees and expenses and cash flows and discounts are all based on the amount of leverage. So is it a harder story to tell because you don't have to do it that way?
People have an immediate reaction, right? It's, wait, you're buying real estate without leverage? Like, are you crazy? What are you doing?
Right.
So there's maybe a little bit of second guessing, but then when you talk about it, things start to make sense. So we launched into the debt-free business to provide quality debt-free product and just to be a niche. We're not out here trying to be the biggest sponsor, right? We could have $1.5 billion of assets under management if we did everything at 50% leverage. Our goal is to provide quality, secure real estate at a slightly lower risk profile because there's no leverage. When we talk about that, first thing investors want to know is, well, am I still going to make any money?
Right.
Yes, we think you will. In fact, the income that you're going to be receiving from a debt-free real estate investment is a whole lot more secure than the income you'll be receiving from a leveraged product. Mm-hmm. Because, think about the cap table. Typically, you've got a capital stack that's 40, 50, 60% debt on the top, then maybe some preferred equity, and then investors are often kind of the common equity at the bottom of that capital stack. If something goes wrong, God forbid something happens to the property or it's sold at whatever the circumstance is, the bank's getting their money back first. Right. With a debt-free investment, we kind of remove that risk. So the worst case scenario, first of all, there's no risk of lender foreclosure,
right,
which we've seen happen. Investors have gotten back pennies on the dollar or possibly nothing.
Especially in this environment right now.
It's a scary thing in this environment. So we are able to de-risk that piece. The income is protected to more than a leverage deal, because as the commercial property is producing rent, it's paid out right to the investors. There's no debt service coverage that we have to pay back to the bank before our investors get paid.
Let's talk about the product then. What is the product that investors can buy into through their advisor?
Sure. So our goal of launching debt-free investment products in the market, we always want to have some variety. Okay. So we structure our deals one of two ways. Everything is a 506C Reg D offering for accredited investors only. We structure deals in two ways. I mentioned we use the Delaware Statutory Trust, so DSTs primarily for 1031 exchange investors, which is the bulk of our business. We saw really the need for investors who were selling property that they owned free and clear. They'd already paid off the mortgage on it. And then when they were doing a 1031 exchange, they didn't want to have to take on new leverage as part of the exchange. Right. So they would look for replacement debt-free property. That's what our debt-free DSTs are really designed to do. We do take cash investments into those as well. It's not the majority of the money that we raise, but we do take cash investments in those. We also have a 506C structured LLC income fund, really designed for cash investments, for custodial qualified funds, IRA, stuff like that. So we'll have that into our income fund, which has the same investment thesis. We're buying similar types of properties into our income fund, but it's going to be probably a more diverse portfolio because it's a $100 million fund as compared to a Delaware Statutory Trust, which most of ours are kind of the 15 to 25 million range. Okay. of all equity. Once people understand why it might make sense to invest in a debt-free real estate deal, the rest goes quickly. We're not doing anything complicated. We're just doing it in a way that people have chosen not to for a long time, for the majority of the time.
Right. So very unique offering, cash-free DSTs.
Yeah.
Or debt-free DSTs.
Yeah, all cash.
Excellent. So the products you have on the market now, how long do they last? Like an investor put his money into a DST, what are they expecting to receive over time, and when would they be transferred, liquidated? How do they get their money back at some point?
Yeah. So as with everybody, it depends to some degree, right? Yeah. One of the unique aspects of being completely debt-free is that we will never have a certain date where we have to sell the property because we have a loan coming to maturity. Mm-hmm. So it gives us the flexibility to ride out market cycles to some degree. We haven't sold a property in 2 years. It's September 2022. Our last sale was, it's September 2024 recording this. Okay. Our last sale was October 2022 because interest rates went up. Prices have been flat, maybe gone down.
Right.
There's no reason for our investors to sell a property because they're still producing exactly as we projected. So the properties are doing great in the portfolio. We could sell them at not an ideal price and give investors the full return of capital and hopefully some appreciation. But we could hold it another year or two, hopefully ride out this market cycle. We'll see what interest rates do. Right? That's out of our control. But we have the flexibility to react to the market and behave that way. So long way of saying, not sure how long cash will be tied up in an investment.
Okay.
We aim kind of that 4 to 6 year time frame. A lot of our business is credit rated tenants with long-term net leases. So we'd like to own that property for several years, work with the tenant to trigger a renewal option to extend the lease, so that when we sell it, we have a nice long lease term on that property. Typically, that's a 5-year type of thing.
Okay.
But ultimately, every property might be a little bit different. Within each of our DSTs, we are able to outline to investors pretty clearly what our goal is for that property. Whether that's a Walgreens or similar type of property where it's really about stable, predictable income, and then hopefully the real estate continues to increase in value. There are other deals where they're a lot more hands-on, kind of living, breathing assets that require more active management. We're closing tomorrow on our first multifamily property that we've purchased in over 2 years.
This number 100?
I think it's property number 100 in the portfolio, I think. So we haven't purchased a multifamily in over 2 years because prices have been so high. It's priced us out as a debt-free group, right? We're not buying the $100 million Class A's, but and also in a debt-free structure, the expense profile has to be small. Mm-hmm. There is a whole lot less wiggle room without leverage.
Right.
So we have to find the right price, and we're closing. We finally found one. We were actually over $1 million lower than the highest bid for this property, but the seller is in a bad, distressed position, lives overseas, had to get out of the property, took our bid because it was all cash.
Right.
Whereas other offers had lender contingencies that were going to drag on for a long time. And because we're an all-cash buyer, we're able to close quickly. So we got a great price on the property. There's a little bit more that needs to be done to it. Right? We need to increase occupancy a little bit. We'll do some upgrades to the units, the individual units themselves. Nothing crazy. We're not building on new buildings or new units or anything like that. But there's some room for upgrades. And to have an active property manager in there as opposed to a very passive owner, we think there's a good chance for some good upside to investors along with steady income. And then we would sell the property in a much different condition than our current seller is selling it to us.
Right.
We'll be able to accept the highest offer, right? We won't have a loan or some other circumstance forcing us to sell this property at a less than opportune market condition.
Yeah, what great time to be a cash buyer.
That's not why we launched this business. The purchasing power wasn't the original goal, but it has been a very convenient side effect.
Well, for to finish and to final up, the advisors who will be looking and watching this video, I think you had a good story now about what Cove Capital is, how this business evolved a long time ago and is new in this channel, relatively new. It's a very unique story. Is there anything you would like to tell the advisors while we have you here about why they should choose you over other options that they may have? So our founders, as I mentioned, they started on the advisory side of the business. They're used to sitting on that side of the table. We value our investors dearly. We view them as long-term partners. We're not in this to make as much money for Cove as we can in the short term. We want to build a large, healthy company with a whole lot of happy investors. And that comes from repeat business, both from repeat investors, but from financial advisors that trust us and continue to work with us. I mentioned we have over 30 groups that we're working with now, up from 2, right.
2.5 years ago. So we've been growing really quickly. Our founders have money in every single one of these deals. We have true skin in the game, and we are able to, because we're debt free, not to harp on it, but we're nimble, we're flexible. If we hear demand from our investors or from our advisors for a certain type of product, we can move that direction pretty quickly. Without having to deal with lenders, we're flexible and I'd say we're really reactive and can move quickly to take advantage of things that we're seeing in the space.
Excellent. Well, it's nice to know that your background aligns you with the advisor and their clients' deep understanding of how important that relationship is, and taking in someone's capital like this, the responsibility of it.
Right.
Yeah. So thank you very much. It's great to meet you. Great to interview you.
It's my pleasure. This was great. Thanks for setting it up.
My pleasure. Thank you.
So quick overview of the Cove team. So our team, we have a fully integrated real estate company here at Cove Capital. We have our acquisitions department, asset management department, accounting, property analysis, in-house counsel, paralegals. We have investor relations, our marketing team, as well as capital markets. So A to Z, Cove Capital, fully integrated to take one of these offerings and one of these properties from acquisition to disposition on behalf of our investors, which we're really proud about. You know, CFO, general counsel, senior VP of operations, VPs of real estate, and a number of other, team members at Cove Capital that make these offerings happen. And each property, that goes into an offering, there's a lot of work that gets done on it. And so we have a very talented group of people that are focused on the underwriting and analysis of the property, the acquisition of the property, and then from there, the asset management of the property. And then lastly, the disposition when we sell a property on behalf of our investors. And then on top of that, just the whole investor relations and accounting function that goes A to Z for our investors in that whole life cycle of an offering. So the Cove Capital team, we're super proud of. We're headquartered out of Torrance, California. Feel free, come out and visit us. We'd love to host you for the day.